Good evening, ladies and gentlemen. Today is the 29th, the July monthly expiry. After the kind of volatility that we saw in the past few days on the Nifty, turned out to be a very mum expiry. And relatively, I had a very risk-off approach. And at every point, my intention was to just reduce my risk against any potential move. No potential move came. It was quite sideways, and we spent the entire day in like a 60-point range or something. And yeah, more or less was a decent expiry. I hope you guys had a good expiry as well. I think today there was one point where there was a lot of fighting happening around that 15,800. Was the call buyers and call sellers potential for short covering. Something that became evident when we headed higher, and still that didn't create any panic in the call sellers, that the upside is potentially limited, especially today. Yeah, all said and done, I managed to get about 2%. And I think given the current situation, that is a good outcome. Thank you so much for watching this. I will not be trading tomorrow. I have some work, and I'll most likely be trading next on Monday. If on Monday I decide not to trade, I'll post about it generally on Twitter in the morning with whatever reason I have to not be trading in case the setup doesn't look good. Thank you so much for watching. I hope you guys have a great weekend, and I will catch you later.
Want to meet like-minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. The time is 9:25. Just entered my position for the day. At entry, I shorted the 15,850 call and 15,650 put. I tried to keep my distance from the put despite the up move, but below 15,650 there was absolutely no premium. So it was entered with higher premium on the call side and low premium on the put side, mostly because it's a gap up. And the idea more or less is yesterday, whatever panic happened, today we have at this point completely mitigated that. And I'm expecting 15,700 to now act as a very good support. And if we start testing yesterday's close, that will be a cue to aggressively take call side credit at 15,800. As of now, there won't be too much available on the OI data as yet. We'll have to wait for this to form. But what it looks like, the 15,750 straddle is trading for about 70 rupees. So that gives us 70 rupees up and down. It's the current pricing of risk in the market. And with that 140 point range that the day is pricing in, 200 point triangle, it's just pricing in slightly more than that. Now, in terms of credit, this given that OTM hedges are not very cheap, I'm sitting on about slightly less than 10 points of credit, about 9.5 points of credit in my current position. And the idea will be, if we do start to test yesterday's close, then aggressively take on more call side credit. And if we probably roll away the put as well to 15,600. If we head on the upside, I'll wait for a clear breach of 15,800, at which point I'll move up my put to 15,700, but leave my calls at 15,850. And yeah, at any point, if I'm losing more than 5 points, I will completely take risk off on the entire position, because I potentially stand to gain 10. I don't plan to give up more than 5 to 6. Okay, so what has happened now is there was a slight IV spike, and there's a lot of 15,750 straddles being written, call options below 15,750 getting unwound, and good put writing at 15,700, and call writing quite strong at 15,800. So working with this into this IV spike, what I have done is I've actually moved in closer to the 15,700, 15,800 triangle. The main reason for this is with the 200 point triangle, any directional move, I won't have any credit left on the other strike to compensate for whatever is happening to the bleeding strike. So to sort of deal with that, I've come in closer. Now the idea is, if either of these starts expanding to about 23, 24, that range, then I will have to cut out of that position and take the risk off by moving away. So this starts expanding to 23, 24, this 15,700 put. I'll have to first cut away half and then the other half. Same with the call option. At least by doing this, I have some credit in my strikes. and can deal with a move in either direction. Currently, the at the money strategy is still trading at about 67-ish, and yeah, we'll keep you posted. The time is 9:44. We've got the entire trading day left to go, and since I've kept quite a tight range, will be an interesting day to say the least. The advantage is I have a lot more credit. Yes, something to note now is this is happening on Reliance. IT, of course, has looked strong since the open. Now the question is, will volume build and we get pulled back to 2100 on Reliance? That's 40 points on Reliance. That pushes us over 15800. So that is one concern. We'll have to be quite careful on the expansion of these calls now. Also, the up move has led to a big crash in the puts, which is why the position is doing well. But now the question is, will there be a 40-point up move on Reliance? So that is to be seen, because Reliance for the longest time, maximum open interest was at 2100. So because of yesterday's dip, if suddenly there is some so-called move that is forced by the market, it might be painful. Anyway, it's just a consideration, not yet a reality. So for now, from what it looks like, there should be very good resistance at 15800, even going by the option chain. There has been a considerable increase since morning, over 1 crore. So 1 crore 4 lakhs at 15800 call option. So I would think most likely it should be defended with a 60% increase today itself. For now, I'm not too concerned. I will wait. I will let this expand to about 22, 23, and at that point only take any corrective action. But yeah, the move on Reliance now very much seems to be happening, and IT continues to look strong. So, okay, what's happening now is I had to square off, because around 23 is when I wanted to square off. So around 21.7 is where I have squared off the 15800 call, because there's some kind of fight that's going to happen here. There is a big open interest, and yeah, if this starts to trigger some kind of short covering, even the 15850 call might be a threat. So that is also a consideration. Anyway, to get out of the way of the headache of having to deal with these expanding, and in order to protect against it aggressively, take the 15750 put trade and whatnot, just decided to roll off the risk and remove the risk altogether on the 15850 call. The 15700 put has given up quite a lot of value. Now, in case we start heading down from here, I will have to do something to manage that. But for now, absolutely nothing. If we hold above 15800 and we start making a 20-point higher move, then I'll also be moving my puts up to 15750. So basically, the idea here is I don't want to stand in the way of these calls getting re-rated and everyone shifting to the 15800 straddle, which will at least give this value of 30. So we'll keep you posted. The time is 11 o'clock, and so far, little bit of an up move and trading at the day's high on the Nifty. Okay, so I'm at a point where I will have to eventually manage this growth. So there's a lot of fighting happening over this 15800. Looks extremely dangerous, so which is why I've stayed away from it. I don't want such a strong risk reward. The thing is, if it rejects, then yes, when it's trading at 22, 23, it will immediately give up 5 points. But at the same time, now this 15700 port, which has now got 90 lakh plus open interest, it will potentially expand more into a down move now. Even if we go to test 15750, it will expand more, and there's really not much credit on the 15850 call. So I mean, my only other option is to take the 15800 call credit, which I'm not going to do. So the idea is, if this expands to about 9.5, 10, that range, I'll square this off and then sell the 15650 put. And essentially, I will be back to my first position. But yeah, no other option given the whole situation wherein the call spread itself is so bad. Like 15800 at 17, and next you get only 3 rupees. So you see, the spread difference won't be that high on the put side. Even for 15500 on the hedge, I'm having to pay almost 2 rupees. So yeah, we'll keep you posted. The time is 11:52, and right now I'm not really going to do much. My next adjustment, if any, on the downside will be if this expands to about 9.5 to 10. So another thing to note, right, rather than looking at what is happening to 15700 put, which is 80 points away, always keep an eye on what's happening with the 15,800 put and 15,750 and how people are reacting there. Now, if some sort of panic is to set in the 15,800 put, then it'll set in the 15,750, and then only you'll see the panic go on to the 15,700 put, if at all there is a panic. Not that there's a panic right now, but look at all strikes. See how those strikes are pricing at different points versus how they are moving. Is there some kind of an urgency to get in, get out? Like right now, you can see this 15,800 put crashing to 28. It's basically a lot of long stop losses hitting. So this green candle that formed, right? Whoever is long quotes, that's why that price has crashed the way it has. Now what it'll do, it'll normalize and probably gain back a little even if we just hold this range as well. So keep looking at what is happening at different price points to understand the mood of the market. Time is 12 o'clock. We're almost at halfway, and so far been quite a narrow range. We'll keep you posted. There's a lot of positions building up around this 15,800 now. Cumulatively, I mean, the calls are twice the number of puts, but cumulatively on this 1.6 crores. Yeah, interest rate, it's like 15,800. We've been stuck around there forever now. Okay, so something to just point out while currently in this situation, Bank Nifty having some kind of a down move, not testing yesterday's close. So you'll have to keep an eye on what happens here. Okay, meanwhile, so to the positional trades, right? This Bank Nifty August future, which is losing me 60,000, is covered by previously this July 35,000 call, which is going to get booked today. 35,200 call going to get booked today. 35,500 call going to get booked today. And yesterday into the down move, I just entered the 35,000 August call for 250 quantity on a 1:1 basis to protect against any further downside, and also 125 quantity of the 34,800. Honestly, this is a very less aggressive way of managing the downside. So into the day, the thing is, because my position sizing, it takes less than about 8% of my margin. I don't mind taking a slight downside risk because my exposure is not that high. If this trade had like 20-30% of my margin, then I would have to manage it very, very aggressively. I would not have had an option to wait for a bounce from the low and stuff like that. That's why position sizing can make a big difference. Same thing in the Nifty, because let us say this was 30-40% of my margin, then I would have had to heavily sell calls to protect against further downside, which I didn't have to do. This Nifty as well, I booked the 15,800 call option in July month. That was covering my futures, which are basically at cost now, but booked a good profit on the 15,800 call. I've also now sold the 15,800 call expiring in August. So this particular position, and in the weekly, I have sold 250 quantity, half the quantity, same as Bank Nifty, at 15,700, which is in the money. I sold it at 93. It's trading at 144, so about 50 points. And towards the close of today, what I'll do is I'll add another 250 quantity for about 50 points. Depending on how the data is looking, if it looks like we will now continue to head higher from here or be sideways from here, these weekly calls which are in the money, which won't have too much intrinsic value beyond a point, extrinsic value behind a point, I might square them off and just switch all 500 quantity to something that's giving me about 60-70 bucks. So we keep you posted. We are now having a slight down move, once again leading to put expansion, mainly coming from the fact that Bank Nifty is broken the day's low. And Reliance as well, after the little strength that it showed in the morning, does not seem to want to carry on. So it's probably a lot of these 15,800 calls, the guys who have sold it, protecting their position. It's not too much of a concern until this starts expanding to about 10. If it expands to about 10, there's really no credit on my call. Even now, there isn't much credit on my call. But of course, I'm working with the fact that there will be a slight IV expansion after we make this kind of a candle. Still quite far away, 75 points away on our put. So you do not have to be in a rush. We'll let it expand to 10. At a point when it's expanded to 10, I will square it off and I'll sell the 15,650 first with half the quantity. And then if it expands to about 12-13, I'll switch the entire quantity to the 15,650 put. Okay, after a lot of here and there. We finally headed to 15,800. And now, actually, the July futures have caught up. For the longest time, there was the July future. So, on the day of expiry itself of a particular future, you can use that to consider market price more than what the spot is, because it's going to be settled today. Otherwise, I go by the spot. But for now, July future also at 15,800. Now, there is the potential for, now these are still trading close to the day's high, not exactly at the day's high. You don't consider the open. Beyond 23, 24, this will really set in a panic on people and get them to cover. That will lead to also an expansion on the 15,850 call. My plan is probably let this expand till about 6.5. And at that point, take in half additional credit on the 15,750 put, which is currently trading at 8.75, but at that point should be trading at somewhere around 6.57. And then there should be 14 points in that triangle. So I'm not going to be in a rush to do this because the defense of 15,800 is not going to be given up so easily. But in case that panic situation does arise, then that is what I will be left with. Keep you posted. Time is 1 o'clock. We've still got 2.5 hours to go for averaging. It's a long day. But so far, more or less, the position is looking perfectly all right. I mean, the way I look at it is like, and something I'm going to probably talk about in the intro today is there's no magic, there's no special thing, there's nothing complicated that has been done here. There's nothing complicated that has been done in any of my previous trades. If you've been following for a while, it's simple things that work. But you might think that there's a trader out there, and I'm very average by all standards. But you might think that there's someone who's really good, and they'll know exactly what's going to happen. Plus, very clearly, they're looking at the same thing that you're looking at. Nobody there can, with complete conviction, tell you that yes, 15,800 is absolutely going to go to zero. Yes, it's a high probability outcome. It's been that way the entire time. So they will assess what is the probability of the outcome, how much can I stand to make. So do I have an edge in this trade? And if it goes against me, what point do I get out? That's what the best trader in the world also will think of the same thing. Nobody knows exactly what's going to happen. If you know exactly what's going to happen, go sell your house, everything you have, and come put it all at once. Like, and you know what? There's a system. I'm not remembering its name, but it talks about if you are 100% certain of an outcome, how do you place bets and whatnot. Regardless, just mumbling at this point. For now, the idea is in case we do see these getting covered to a large extent. I mean, in a lot of ways, it has been covered by the writing of 15,800 put option, which is now basically trading at the same price as 40 points, 44 points in the 15,800 straddle. And yeah, let's see if the 15,850 calls get threatened. For now, the thing is, IT after making a very strong up move in the day, it's been very sideways. And Bank Nifty, after showing some amount of weakness in the morning, is now contributing to the up move. So, okay, we continue to hold strong, mainly from Bank Nifty, which is now above 34,750. What I'm more or less looking at is that this 15,800 call is really not gaining that much. I'm not seeing some kind of panic short covering taking place. 10 points in the money, trading at 20, which the 15,800 put has given up immense amount of value. But you're not seeing that spiking runaway kind of a move. So it's one of those classic people who are short this are not really afraid, because for this to match its intrinsic value, it has to make a 10-point up move, and that will more or less do it. And yeah, something is happening there. Market is not really buying into it. So at the same time, if I move up to the 15,750 put now, considering how much more time has elapsed, we're just 1 hour 20 minutes away from averaging. I'll get a really bad price. And for whatever reason, if there's a rejection, you'll get a horrible pricing. So my plan is, if this expands to 6.5, I'm going to square this off and I'm going to sell the 16,900, which is available for 1.3 or something, might be available for 1.5, 1.6 at that point, and I'll call it a day. I mean, with the kind of longs that have built up during the day, during all of today, massive amount of long positions added, probably mostly to cover all the shorts that were already in the system. But with this, if there's a down move, the kind of unwinding that can happen, it's just very bad risk reward to further increase long buys. I'm still 40 points out of the money with 1 hour 20 minutes to go on the call side, especially with 1 crore plus 1 crore 10 lakhs of 15,800 calls written. And how much is on? Yeah, 82 lakhs on the 15,850. So with that, I think this is good enough. I'll let this either expand to 6.5 and then cut the position and sell the 15,900, which almost certainly you can consider. Even if we have a short covering of this magnitude, I think 15,900 should more or less be safe. And yeah, no additional put trade. The initial idea was if when this test itself happened, when here it happened, had we tried, that would have led to an expansion on the call, and there would still be about 6.5 rupees left on the 15 cent 50 put. Now there's hardly 4 rupees change, so it's not worth it. I'm not going to do that. Okay, so making an up move 15 points above 15,800, but 15,800 continues to trade at a very low price. 21, 22 gives it, I mean, a time value of only about 5 points, 6 points. Same thing, I've still not taken credit from the 15,750, but now because there's only 1 rupee 40 paise and less than 1 rupee essentially credit from my put side. Any expansion to 5, I will have to risk off on the calls or take on additional credit on the put side. So, I mean, I don't see exactly where the strength could come from at this point of time. I guess Reliance could make a quick up move towards the end. I don't think Bank Nifty necessarily is going to be the contributor of strength here. There's equal amount of shorts in the Bank Nifty. So anyway, at this point, it's just a risk management thing. So if this expands to 5, we'll just be taking the risk off on this and call it a day at that point. Okay, so this we're now seeing a slight down move, and this is exactly why I don't like to take. This put went down to like 3 bucks or something, and from there very quickly shot up to 7, 8, 9 as soon as there was a down move. So that's exactly what you'd be entering it if you're moving up your put at terrible prices at the high of the day. Then just like a 15-point move has doubled it, right? It hasn't made it gained 4.5, 5 points, which is why I hadn't moved up my put. Now I'll wait and see if we basically start heading to around 15,765 roughly, which is a swing that we made. Then I'll see what happens with these puts. If these expand to something like 4.5, 5, then I will consider moving them away as well. It's a monthly expiry. So what happens on monthly expiries? There are a lot of stock positions that people have, and there can be randomness in the last half an hour. Monthly expiries generally because there's a whole bunch of things happening at the same time, stock options, index options, everything. They can be a little tense. So which is why I'm preferring the risk off approach rather than taking additional credit. So I would not want to take the 15,800 credit just because this starts expanding a little bit. Yeah, that being the case, we'll keep you posted. Anyway, the plan will be into averaging, which is 40 minutes from now. If there's any good opportunity to take additional credit on both sides, I will. The time is 2:30. We have got 28 minutes left to go for averaging, 2:32. My trade doesn't have anything left anymore. There is like 2 points in the shorts triangle, and my hedges are costing about 60 paisa, 1 rupee 40 paisa. The only reason I'm in this trade at this point is to look for any last minute credit that I can take. So if either expands to 3, that is basically going to mean I'm going to cut out of that position. I stand to gain 2 points from this, so I can give up about 1 point worst case from where I am currently. And yeah, that's the plan. We'll keep you posted. So far, build up to averaging, really not a lot happening. I think the only thing that's visible is that Reliance has shown weakness towards the end, and IT now, after consolidating the entire day, now making an up move. Most likely, TCS wants to end at 3,200. So, okay, we have 8 minutes to go for averaging. Towards the end, we're seeing a little bit of a dip, and looks like the 15,800 call fight has been won by the people who have sold it. They've held on, more or less. Yeah, the 15,800 call most certainly now can be considered, can end worthless, but it's just not good risk reward to shift my calls down. I have no concern of like trying to get better pricing on the 15750, 15800 call, even if it's that position that I'm going to end with. The thing is, if I enter it now, I'll get better pricing on it, but I also have to hold on to more time. I have no intention of holding a 50 point triangle, especially when the 7 minutes to go for averaging. Now, into averaging, past 5 minutes, no move, that changes everything. The entire equation, risk reward equation, is changed. It might seem like a terrible risk reward equation actually to a lot of people, saying that it's just like 2 rupees you can gain. But no, it's not that. I mean, the probability of them going to zero at that point is just extremely high. And yeah, also there's always a stop loss into averaging in case some move does happen. So we have gotten into averaging, and it's a picture perfect 15800 finish. Now that's actually not the best case scenario for me, because it means I can't possibly take any additional credit. Which side am I going to take credit from? Any side I do take credit from will then hold a lot of risk. So I moved my puts up to 15750 at about 60 pice or something, because my 700 puts were at 30 pice. So that's just 30 pice additional collection from there. I'll wait into averaging and see if it's possible to then take this 15800 calls credit at a point where it's almost certainly improbable. So, like for example, if we spend 15 minutes at or below 15790, then I can say that okay, high probability that this call goes to zero for sure. I only want to take a trade which is like really almost, no trade is for sure, but if we hold this exact range for 15 minutes at 315, I can then take this 15800 call trade. If that doesn't happen and we make an up move, then it'll depend. I need basically the 30-minute average price of Nifty to be either above or below. I'm working with below for now in case I do take call side trade. I'll not rush into it right now. It'll be really bad. If there is a up move right now, this will double, and just like that. So that being the case, we'll keep you posted if I'm taking any additional trade or not. Generally, I mean, if you remember my previous style of trading when the IV was much higher, so it's like 3, 4, 5 months back, I would straddle into the expiry because the premiums were already so good at the beginning that you could take such kind of a risk reward. Right now, it doesn't make sense to take trades like that with given premiums. But that being said, with the method that I'm following now, which is just to have a 50 point triangle into the close, I need there to be between strikes, right? So I need the index to be between strikes so that the average for a long time is in between two strikes, and then it makes sense for me to take additional trade. And we'll keep you posted. The 3 minutes into averaging at this point, and so far about 11 points is what it looks like we're locking in for the day. Hedging costs quite high these days, so 50,000, so that as well, and this hedge also. So almost 140,000 just paid for hedges, but that's the nature of the market we're in lately. We'll keep you posted. Time is 5:03. Okay, brilliant. So we have had a little bit of a dip, about 20-point dip, and we are 7 minutes into averaging now. With the 20-point dip and 7 minutes roughly spent between 790 and 780, now it is fine to take the 15800 call credit. So I have moved my calls down and got about 160 for it. I mainly do this because of having spent this much time now 20 points below 15800. Like for context, right? This 33 rupees, this 15750 call has to go to 50 for this call to be worth anything. So that's more or less how it works. Now, currently, my short position itself, it has about 1 rupee 80 paisa in it, and I have 20 paisa in my hedges, so 1.6. Right now, since it's very high probability, the max I can let either expand to, especially the put, I don't think will give me a problem. Max I can let the call expand to is about 2.5. It expands to 2.5, I'll just cut out of the trade, and that'll be that. And yeah, here is what is happening. We're making this down. We'll have to, like, even if we end at 15800 or above 15800, this call will not have any value because you have to look at the average price of Nifty. Could I have got better call credit? Absolutely. If I run this back, is there any scenario in which I actually take that call credit? Not many, unless I'm very convinced of that, okay, there will be certainly a down move after like there was, I think, 4 weeks back when into averaging I was short an in the money call. I was quite certain that there's a high probability of a down move, but that backfired. But anyway, that was well within the risk I was willing to take when I took that trade. Okay, brilliant. So we have had a little bit of a dip, about 20-point dip, and we are 7 minutes into averaging. Now, with the 20-point dip and 7 minutes roughly spent between 790 and 780, now it is fine to take the 15800 call credit. So I have moved my calls down and got about 160 for it. I mainly do this because of having spent this much time now 20 points below 15800. Like for context, right? This 33 rupees, this 15750 call has to go to 50 for this call to be worth anything. So that's more or less how it works. Now, currently, my short position itself, it has about 1 rupee 80 paisa in it, and I have 20 paisa in my hedges, so 1.6. Right now, since this is very high probability, the max I can let either expand to, especially the put I don't think will give me a problem. Max I can let the call expand to is about 2.5. It expands to 2.5, I'll just cut out of the trade, and that'll be that. Okay, so looks like worked out quite well, and currently 40 paisa is almost an impossibility that either options have any value. There's about 14 minutes left and 9 minutes to auto square off. What I'm going to do now is, so these three positions will get booked today. They'll expire worthless, and I'll just let them expire worthless. I'm not going to square them off. Somebody pointed out the other day that auto square off on this costs 50 rupees. So like you're saving here and you're like, so you're saving here and you're paying for auto square off. It's fine. The reason I don't manually square off is if I do set limit orders also for 10 paisa, they don't sell. So only when there's a forced auto square off, different brokers will be forcing different people to square off their positions will I find a counterparty. So anyway, Zerodha has served me quite well. Now here's my thing. What I'm going to do is this future will now, after this expiry, have only these calls which are out of the money, and these calls which are also out of the money, covering it. For the Bank Nifty position, I'll be adding 125 quantity of call sell at 35,200. So as just further protection, because today all these other protections have expired. I'll show you what it looks like also once it's done. Okay, yeah. So that has been added as protection. And on the Nifty, what I'm going to do is I'm going to square off the 15,700. Where is that? Yeah, I'm going to square this off. And so essentially, I'll be booking on 250 quantity. I'm booking a loss of 45 plus 6, about 50 points. I'll be selling twice the quantity of 500 quantity of this 5th August 15,950. So I'll show you how that also looks. I realize with the payoff diagram, it'll be much easier for people to see this. Yeah, so okay, that's more or less it. Let me jump to the payoff diagram. I have to remove all the MIS. To also remove any and all July positions. Okay, Nifty future call and my 15,950. It's not picked it up. Oh, okay, I see the problem. It's on MIS. Good that I noticed. I need this to be converted. Okay, I don't know why it's not picking up, but I'll just add this and show you anyway. 5th August 15,950. So this is how the position looks. In case there's a down move, the weekly calls as well as the monthly call, they offer some protection. In case there's an up move, I will get the opportunity to either book a loss on my calls and roll them over, or my calls will just lose their value, in which case my essential covered call will be working all right. So only if we are heading over 15,900, making a new lifetime high, will I have a problem with this position. Yeah, pull up the Bank Nifty as well. This should be relatively easier to make sense of. So I'll just remove the July positions. All right. So this is how my bank Nifty position is looking like. Right now, it does have a positive delta. Once all my positions are booked, I will essentially be in a mark-to-market loss. So because all the profit positions will be booked. This is more or less how it looks. In case we make a down move, then I'll be taking additional call credit. In case we make an up move, then my 34,800 call will probably go in the money. If it goes in the money, I'll do the same kind of rollover. So I'm following this trade along with my intraday trading videos every in all my videos. And if I don't make an intraday trading video, if I'm not trading that day, I post on Twitter. Basically, one of two things happens in this. My monthly call gives me some amount of protection on the downside to the future, and my weekly calls just keep giving me even more protection. Now, there are times into an up move where those calls might bleed, in which case I'll do a rollover. And in case they don't, then they're just going to give up all their value and I'll book that profit. So, anyway, that is that. We should be getting auto squared off soon in about a minute's time. I think overall the expiry was relatively very mild for a monthly expiry. Very mild. We after the kind of day that we saw yesterday, today we had just I think all day we were in about 50 points range, and not much happened at all the entire time. Still managed to book about 2% on the margin used, which lately, I mean, it's difficult because for hedging you have to pay quite a lot, and that's going to further come down. So I think percentage-wise goals as well as percentage-wise returns will have to keep on the lower side. It'll be interesting to see how things pan out. Also, all of my orders will be available on the Telegram channel in case anybody wants to go through those. Every day I've traded, every single order book is available on the Nifty BN Telegram channel. That's about it. I wonder if I will be able to cut this. Doesn't look like it for the call option no takers. But yeah, thank you for watching. I think apart from the positional things that can't really consider, it's still a good 2% and good expiry. Wasn't really very difficult to manage. I hope you had a good expiry. I will not be trading tomorrow as I have some work. So I will probably catch you next on Monday. If I'm not trading on Monday, I will post about it on Twitter. Take care. Have a great day.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab. So do not forget to check that from time to time.